Welcome back to another video. Sohail here, and today I want to teach you a very profitable trading strategy which is called Magic Breakout. This trading strategy has extremely high degree of accuracy if you run it correctly, so make sure you watch this video until the end because I'll mention important points about this strategy which you must pay attention to them when using this awesome trading strategy. Without wasting any more time, let's get started. Alright, this trading strategy is based on intraday timeframes from 15 minutes to 4 hours, suitable for day trading to possibly swing trading. Based on my personal experiences, 1 hour time frame is the best among them, so I continue this video on 1 hour time frame. In this trading strategy, we have 4 indicators: CCI, Commodity Channel Index, and 3 EMAs, exponential moving averages. For adding indicators, here we click on indicators and we simply search the name CCI, this one. We use this indicator with its default settings. Just make sure the length is 20 and the source HLC3, and here SMA for method with length of 5. And in the style tab, make sure that the upper band is 100 and the lower band minus 100. Now we must add 3 exponential moving averages to our chart. We can add them separately, or an easier way is to add moving average ribbon, this one, which gives us 4 moving averages. Here in the settings, we unselect one of them because we need 3 moving averages in this trading strategy. Here in this field, we set EMA because we need exponential moving averages in this trading strategy. Then we must set 34 for the length of the 3 exponential moving averages. And finally, we must change the source of calculation for our EMAs. For the first one on high, for the second one on close, and for the third one on low. We click on OK. Everything is already set on the chart. And before we start the strategy, please give this video a like. And if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, now let's see how we trade based on this trading strategy. This is a trend following strategy. So the first thing that must be identified is existence of a trend. How we do it? By the help of these 3 EMAs we already added to our chart. In this strategy, we consider that these 3 EMAs are one indicator and we call it wave. So this is wave top, wave middle, and wave bottom. When the price crosses the wave in an upside move and the price is above the wave bottom, we can consider that advancing of the price just started. Then based on this strategy, the price should go above the wave top and stay there for some times, and after that it must decline and enter the wave. In other words, at this moment the price was above the wave and then ideally cross the wave top in a downside move, or at least it must be in the touching point of the wave top. Pay attention that the price shouldn't go below the wave bottom considerably. Then we take a look at the CCI, which is actually going to give us the trading signal. When the CCI crosses above the plus 100 line, this is a signal for opening a long position, but there is a condition that must be met. We must check and see if CCI was below plus 100 line for at least 5 candles before the cross. Again, we check if the price is still above the wave bottom, and if this is also met, we buy or enter a long position here as the new candle opens. So at this point would be our trade entry for long position, and the stop loss for this trade is placed just below the wave bottom. And the profit target for this trade can be placed at 2 levels. One could be here when the price goes below the wave. Actually, you see a candle closed below the wave bottom, which this profit target is more suitable for traders who intend to give more room to the price action and catch larger movements of the trend. And another profit target could be here when we see a candle closed below the wave top, which this profit target is more suitable for traders who are more conservative and intend to take their profits earlier. One important point that you must pay attention is that the pullback to the wave shouldn't go below the wave in this case of bullish market. For example, at this part of the chart, you can clearly see that here the price crossed above the wave, stayed there for some times, but then the correction was so deep that it went below the wave. In the return, here CCI gave the signal and other conditions are also met, and the price truly advanced after that, as you can see. But we don't take this trade because here the price went below the wave bottom and it could be the starting point of a downtrend. We want to lower our risk as much as possible, so we only focus on when the price is in the touching point of the wave or penetrate the wave like this, but not going below the wave. Based on our strategy, when we have this condition, the market is considered bearish. Let me show you a bearish signal based on this trading strategy, so it will be clear for you. When the price crosses the wave in a downside move and it's below the wave top, the market is considered to be a downtrend or possibly flat before starting of the downtrend. Then the price should go below the wave bottom, staying there for some times, and after that it must advance and touch or enter the wave, which provides the base for CCI. And in this situation, when CCI crosses below -100, it's a sell signal. But similarly here, there is a condition that must be met. The CCI must be above the -100 line for at least 5 candles before the cross. Then again, we check the price to see if the price is still below the wave top. If this is also met, then we enter a short position. In this case, you can see that the swing of the price is very small and the touching or penetration is also not satisfying. Even if we consider these conditions good, the CCI crossed below -100 at this point, but for the 5 candles before the crossing, the CCI was not above -100, so the signal is rejected here. By practicing more with this trading strategy, you will better understand from the first look of the swing and the pullback if it's a good one or not. So here we give another chance to the price for a better swing and pullback. Here the price touches the wave, and after that CCI crosses below -100 line here at this point. For the previous 5 candles, the CCI was above -100, actually very close or running on the line, which is a little risky, but as long as the condition is met, we continue. At the time of crossing, the price is still below the wave top, so we enter a short position here as the new candle opens. This can be our trade entry for opening a short position. The stop loss is similarly placed above the wave top, and for the profit target we can set it somewhere around here when the candle closed above the wave bottom or above the wave top, so we can take our profit for this trade possibly here. Please pay attention that this is a trend following trading strategy, which means it works well when the market is trending, but it doesn't work well when the market is in a trading range moving sideways. This trading strategy is strong enough not to frequently provide signals when the market is flat. For example, here after this downtrend stopped and the market went to a trading range, this trading strategy didn't give false signals most of the time, because in this situation of flat market, the price usually moves very closely to the wave, as you can see, which doesn't create that kinds of swings and pullbacks we need in this strategy. And in cases that it moves further away from the wave, in the pullback, the price goes to the other side of the wave because the market is in a trading range. So you must pay attention to this important point and stop trading when you can clearly see that the market is moving sideways. This usually happens when an existing trend weakens and stops continuing in that direction. So it's a good idea not to take any trade in times when a trend is stopped and the price is in the process of changing to a new trend or possibly continuing its prior direction. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video and good luck with your trading.